Hello, good morning, good afternoon, good evening, wherever you are. My name is Mike Murithi, and I will take you through the small and medium enterprise sales report. And like you can see here, it's an Excel-based tool, a very simple to use tool that will appear as a document on your smartphone or your laptop or your desktop or your tablet. So let's open it, let's see what's inside. Okay, so like you can see here above, we have two worksheets. One of them is sales and the other one is orders. And before you start selling cereals, you must do an order, right? So today I want us to begin with how to make an order or how to plan for an order. So like in the first column, you can see the product description. Those are the names of all the possible cereals in a cereal shop, in a small or a medium cereal shop. And today I wanted to order just saitoti beans. So let's begin. So this is saitoti beans. The second column asks about bulk quantities. By bulk quantities, maybe you're buying from a wholesaler, and the wholesaler has a condition that you must buy a certain amount. So like in this case, a wholesaler sells 90 his products as in 90 kgs gunny sacks, and I usually sell it at let's assume 10,000. So you input that 10,000 there. Then the third column asks about how many units are you ordering. Maybe after bargaining and after discussing it with your wholesaler, you've told him that you are not able to buy 90 kgs, but you want to buy 50, and you have agreed, and he has extended the wholesale price to you. So you come and write it 50 kgs here. That is the amount that that is the units that you're ordering. So after you write it there, this tool will calculate for you the unit price per order, like you can see here. The reason it's telling you unprotect sheet, it's because I locked the column just in case someone tampers with the formulas accidentally. So like in this case, you can see the unit price per order is 111 shillings. And where is the 111 coming from? Remember, in bulk, the price in bulk was 10,000. So 10,000 divided by the units, which is 90 kgs, will give you 111 shillings. So it has saved you the time. So the two green columns, which is the unit price per order and the ordering cost, they contain formulas. They're automated, right? So you will also the tool will also calculate for you the ordering cost. How much will you spend to order 50 kgs? And in this case, it will be 50 kgs times this 111 shillings, so that you get 5,555 shillings. That is the amount that will come from your pocket to order the 50 kilograms. All right. don't worry, that is automated. So now, next, the column is asking your neighbor's price per unit. By your neighbor, I mean your competitor. Remember, when you are selling cereals, you are not the only one in that region. So, how much are they selling 1 kg of Saitoti beans? And in this case, your neighbor is selling at let's say 120 shillings. So you come and write 120 shillings there. And then the tool will guide you on the break-even price, a price that you should not sell below, because you start making losses if you sell below that price. You know, it depends on how much you spent to buy that product. Let's assume, like in this case, you spent 111 shillings to buy 1 kilogram of Saitoti beans. So this tool has allocated you 122 shillings. Remember, it has factored in the cost that you might have used along the way. Maybe you paid someone, a boda boda guy, to drop your products, or maybe you took lunch while headed to the wholesaler shop. So never don't sell below 122 shillings. So like in this case, you can see that 122 minus 111 shillings, that is around 11 shillings for 1 kg. All right, so that will cater for the small expenses. So the other column, which is this one, it shows you the initial budget. How much are you spending to buy that kg? Remember, this is an aggregated value. Remember, you won't be buying just Saitoti beans. This was just an example. So if you are buying like 5 products, this amount will definitely change, right? But in this case, since you are buying just one product, which is Saitoti beans, it will be the same as the ordering cost, which is 5,555. All right? Yeah. So that is your budget. So minimum sales projections. Okay, for the Saitoti beans, you're planning to sell, from these calculations, you will gain 5,555. That is from sales. Anything below that amount, you're making a loss. All right? But the tool will guide you. Remember, this column is automated. That's why it's green. And how much profits are you expected? Like you can see, you've attained the break-even point, whereby your expected profits in this case will be 0. Why? Because that's where the profits and losses comes in. And remember, this sheet, this worksheet is guiding you on the minimum price that you're supposed to input at the sales sheet. And in this case, the minimum price that has been set for this product will be 122. All right? Yeah. So this worksheet will work hand in hand with the sales, because that's where now the profits are. All right? Yeah. So now let's go to the sales after now you have made the order. Okay, this is the product description for ABC Enterprises, and in our case the product was Saitoti beans. Okay, so you write it there, and then that was week 1. All right, Week one, how the column is asking you units purchased, or rather the smallest measurable values in kgs, in pieces, in packets. But in our case, it's in kilograms, right? So we purchased, if you can remember, we purchased 50 kilograms. So available stock at the shop. Remember, since you have already purchased and maybe you didn't have the any stock left, at the moment common sense will guide you to write 50, all right, because the product has already landed at your shop. Then there's this other column that is asking you purchase price per unit. Like you can remember, our purchase price was 111, all right? Yes. So did you receive any discounts? No, you didn't, so you write 0 there. So in this green column, it is automated, it has a formula. So you'll see that the purchase price plus discounts, in this case it's 5,550. Okay. So I've included a comment there which says discount from your supplier belongs to you, not the customer. So it's up to you to decide whether to let the customer enjoy this discount too by reducing the prices or... Okay, I just remembered something. Remember from the order list, our purchase price per unit was actually 111.11. Don't ignore the cents. Very important, because if you're selling a bulk or huge quantities of a commodity, the cents will have a meaning, and it may make you lose money. So like here I've updated, that will be 111.11. That's 11 cents. And like you can see here, the purchase price imepanda by 5 shillings. It has gone up by 5 shillings, so that will be 5,555.5. Okay, so this column, it's asking you about the costs related to purchase, e.g. piki, fuel, etc. Like in this case, maybe to bring the 50 kgs to your shop from your supplier, you spent, let's say, 150 shillings. Okay. So then there's this now, the price from other stores around you. How many did we write here? We said that your neighbor's prices per unit was 120, so you come and write it here. That is 120. Okay, then how many units have you sold? Okay, up to the point you're writing this report. So remember, you bought 50. The available units in your shop is 50, right? And you bought 50. But now I don't want to assume that you sold the entire 50. Probably you sold 45 units. Okay, so come and write 45 here. Okay, so your final price for this product, how will you determine your final price? Remember your neighbor is selling at 120 shillings, right? So now you use your own discretion to determine your price. And in this case, let's assume Since your neighbor is selling at 120 and the tool guided you not to sell below 122.22 shillings, what will you do? That way now you decide, come back and put 125. All right, yeah, because at the end of the day you must gain from the sale. Okay, so this tool has already calculated for you the sales before expenses. Remember, it has not yet deducted the 150 shillings that you used for piki piki, for the boda boda. So there's this other column that expects you to, that the tool will calculate for you, which is the expected units in stock. It's here and it's automated, so you don't have to calculate it. Remember, you had 50 kgs, or rather 50 units, which in our case it's kgs, but now you only sold 45. So at the end of the week 1, you expect to have 5 units remaining in your shop. Okay, but the tool has already calculated for you. But when you are going to do a stock taking, you find out that you only have 4 units. Maybe you had sent someone to sell on your behalf or to hold brief for you in that week, but you find that there's a discrepancy. The tool will show you the number of missing products, and in this case is 5 minus 4, which is 1. But now assume that all the records were good and you actually found out you had 5 units. So the tool will give you a 0 for number of missing products. All right. Then let's go now to the next column, which also has a formula, so you don't have to calculate it, which is the expected cash from your cashier for this product. Remember, sales before expenses was 625. All right, but now the cashier maybe paid the boda boda guy. Okay, she paid him 150 shillings, and now she was left with 5,625 minus 150, which is 5,475. All right, so that is what you expect to be given by your cashier. Okay, so let's assume the cashier gave you 5,475. So you come and write it here, 5,475.00. Okay, so that is the amount of cash from your cashier for this product. You don't have to worry because this tool will be guiding you. I haven't used very complicated finance jargon, so it's easy to understand. Okay, so like in this case, since the cashier has given you the amount that you expected her to give you, then there will be no short. Okay, your short will be 0. But now let's assume the cashier, from the 54.75 that she was supposed to give you, she gave you 5,400. So where is the 75 shillings? The tool will tell you how much money that you should have gotten from the cashier, and in this case she hasn't refunded 75 shillings, and maybe you can decide now to maybe forgive her. You can decide to to deduct it from the end of the week wages. Yeah, but remember that this column is automated. It will calculate the amounts automatically. The column that shows you the expected cash from your cashier is also automated. Yeah, and I've locked the cells, the green columns, so that people cannot tamper with the formulas. Okay, yeah. So let's now go to the summaries, and in this case we want to calculate the net profit for that month. Okay, the net profit or loss. Like in this case, since we are actually selling just one product, the sales were 50 or rather 5,625. That was the total sales. It will calculate automatically. This cell will update automatically, so we don't have to fill it. But now here on the opening stock, you'll have to fill. Okay, and the opening stock in our case, since we were just buying, it was 0. All right, then you made the purchases. The amount you spent while purchasing the Saitoti beans was 5,555.50. Okay, that is automated. You don't have to calculate it. Then cost of goods available for sale, that is also automated. And I also added a comment here, which is the opening inventory plus purchases. That is what will give you the cost of goods available for sale. So what is the closing stock in the month? The closing stock in the month, like we saw, it was 5. All right, and like you can see here, as that will be okay. Let's continue. We usually call this income and expenditure statement. It will analyze your net profit at the end of the month, and it's a very important tool, and it actually begins with the sales, the total sales for the month, and in this case it will be month 1. So it is also automated. Remember, this 5,625 is the same as the sales before expenses. All right, okay. Then now you'll have to subtract the cost of goods sold from the sales, and most of the sales here are automated. The ones you can see color on them, they have formulas and some comments. Like in this case, the cost of goods available for sale, it will be the opening stock plus the purchases. All right, from the goods that you purchased. Okay, let's start filling now the cost of goods sold, and we begin with the first component, which is the opening stock. Remember, we were just starting a business, okay, and the opening stock was 0. All right, so you'll have to come and fill 0 there. Remember, that cell is not shaded, so it doesn't contain a formula. Okay, then the total purchases, it is automated. It will update itself, which is 5,555.50, and this amount comes from It comes from this cell here. All right, the purchase price plus the discounts, but it will update itself when it comes to the income statement. Okay, let's go now to the next, which is the cost of goods available for sale, and in this case it will be the same as the total purchases because we didn't have an opening stock. All right, then you will be expected now to fill. Remember, this sale is not it's not automated, so you'll have, after conducting a stock take at the end of the month, you now come and update this cell here. That is a closing stock for the month. Remember, we had bought, let's go back to the tool, we had bought 50 units, okay, but we were able to sell 45 units, and according to our tool, the stock that is available at the end of that month will be 5. Okay, and again, please note that we are using week 1 as our month in this case. I don't expect that you'll be conducting a summary after every week. That will be very tiresome. It will be very cumbersome, and I would advise you to use from period 1, period 2, period 3, period 4 for every product. All right, yeah, it will be easier that way, but in this case, since I'm just guiding you on how to fill the tool, we can use week 1, because if we use too much data, even my explanations will start going through the roof. Okay, so we bought 50, we sold 45. How many are remaining? That will be 50 minus 45. That is 5 units. But since this is just a model, you just go to your shelves and calculate while you are doing the stock take. So this cell will be only filled when you've verified the units in your store. Remember, the purchase price was 111.11 shillings. That was the purchase price per unit, and we have 5 units remaining. So what will be now the cost of the closing stock? That way now you come and include a formula. That will be, in Excel, you have to start a formula with an equals. Okay, so 5 units, then you multiply is a star by 111.11. We said do not ignore the cents, they're very important. Okay, so when you have already inputted the closing stock for the month, these other cells will update themselves automatically, and I have added the comments there. Like you can see, the cost of goods sold, or the COGS, will be the same as opening inventory. You add the purchases, then you subtract the closing inventory. Or you can also say cost of goods available for sale plus the purchases, then you less the closing inventory. But don't worry about that, the cell will calculate for you. Okay, now let's go to the next, which is now the gross the cost of goods sold. And the cost of goods sold in this case, we have already found out that it is 4,999.95. that is roughly 5,000, but I don't want to assume that. Then the tool will also calculate for you. I've automated it so that it will calculate the gross profit after doing all those mathematics. And the gross profit is the money you get before you subtract the expenses. Okay, and in this case your gross profit will be 625. So you can see from your sales of 5,000 and 625, you've actually earned 625 in profits. Okay, that is after subtracting all the money you spent ordering for that commodity. It's not bad money. Remember, you're not just selling saitoti beans, you're selling so many other products, so the gross profit will go up because yeah, let's go to the subtracting of our expenses. And in our case, our expenses for the month for this product only was 150. Remember the picky guy that we paid? That was an expense here. But now assume you had other expenses, other related expenses. I would advise you include them. To avoid much stress analyzing your expenses, you can include them at the 150 point. Maybe you can say 200 to cover now for the other small expenses. But to cover for that too, I've allocated an item here. We usually call it the other costs. Okay, so any other cost, maybe your store is located near a public washroom like the kanjos and all that, and your staff usually use it at 10 shillings, 20 shillings and all that. So in a day maybe they have spent 50 shillings. Okay, so you can just come and include the costs here on the other expenses. Or maybe they usually eat lunch while at the facility, so you can include all the costs here. All right, yeah, but this will make sense once you have listed other commodities here. I don't expect them to be just saitoti beans. Okay, yeah, so in our case we only had one transportation cost, which was 150. From this money we are not paying rent, electricity, we are not package costs, we are not wages. You can't pay wages from one product. Repairs, and maybe there were other costs. And remember, according to the government guidelines, you're supposed to pay if you're earning an amount that is less than 500,000. You're supposed to pay a turnover tax, or maybe it changed. Maybe you can go and make further inquiries. So these two will also calculate to you the total expenses for the month, which will be for that product, sorry, that will be 150. But now if you add so many other products, this amount will be like maybe let's say 15,000 or 10,000. It will depend with the size of your business. So how do you now get the net profit or loss? The loss will have a blankets around it, but in this case it's a net profit. So for that one product you have been able to gain 475 shillings and 5 cents, but that is after you have subtracted all the expenses. Okay, yes, so that's all for now. Next time when I come back, I'll try to furnish you with information on how to fill week 2, week 3, week 4 for the same product, so that the tool can now begin to make enough sense. Okay, then now in the third lesson we'll be able now to see, in the fourth lesson, sorry, we'll be able to see, we'll fill like 20 products, so that we can see how much you can gain from that. Remember, financial literacy is important in every business, and that's why you see most businesses collapsing, because when it comes to accounting for their money, it's a challenge. But with this tool, that will be a thing of the past. Okay. Yes. So also in the coming lessons, we'll be able now to analyze the statement of financial positions. These are actually done after every year, so this will be a separate lesson. We will also cover the statement of cash flows. These were a tool that captures the movement of cash in and out of the business. And we'll also analyze the salary schedule in case you have permanent employees. Okay, this is a tool. Let me minimize it. That is a tool, but it will be in a different class. Remember, it has also been automated, like you can see. That is a formula, so it's automated. So that's okay for now. Yeah, goodbye, and follow us for more. Subscribe and leave a like or a comment. Goodbye.